heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, Apple wiping out as much as $200 billion in market value. That's as China broadens its iPhone ban. We'll discuss the outlook for the company and what it means for US-China relations.
And we'll dive deep into the world of artificial intelligence with the CEO of Imbue, which just raised $200 million. And we speak to the former CEO of Argo AI as he embarks on a new mission with more than $1 billion in backing expected to come from SoftBank.
Meanwhile, Instacart preparing to set its IPO price range as soon as Monday, as the startup is gearing for its roadshow. We'll bring you all that and so much more. But Ed, the market is being dictated front and center by what is happening with Apple right now.
Yeah, and that's exactly how we frame it. The news, Chinese authorities, according to Bloomberg sources, are thinking about expanding a ban on the iPhone in state enterprises and in government agencies. The market reaction is clear, with off-session lows in Thursday's session down around 3%. But just following the open, we were down 5%. That was putting us on track for our biggest single-day drop since September of last year, so in a year. And on a two-day basis, we were headed for our biggest two-day drop since May of 2022. That tells you the severity of the action. And we will look at some of the suppliers later in the program who are also moving to the downside. You talked about at the top of the show that $200 billion of market cap shed because of what's been reported over the last 24 hours. That was on a two-day basis. Where we're at now, $2.77 trillion or $80 billion approximately in market cap, 80 to 90 billion shed this morning alone. And you think about Apple as the biggest constituent of both the S&P 500, the NASDAQ 100. Caro, you're absolutely right. It's being felt much more broadly in financial markets this Thursday. Let's get the details and what's happening with China's reported Apple ban with Bloomberg's Mark Gurman, chief correspondent for Apple. Mark, tell us what we know at this stage.
Yeah, Ed, thank you for having me. What we're reporting is that government-owned companies, government agencies, those types of government-affiliated organizations, in addition to the government itself, is either banning or plans to ban the use of iPhones and other foreign-built devices or devices from foreign-run companies to China within the region. Now, this is clearly having a major impact on the market. Like you said, a couple $100 billion of market cap getting wiped away because of this news. And one thing I want to clarify is I think investor concerns is not so much on lost unit sales from a potential ban like this from these agencies, but it's what it means for Chinese nationalism. And if people in China are going to decide to no longer buy iPhones in some quantity because of this. So it's not the government employees that investors are concerned about, but if this is going to create some sort of domino effect for the iPhone's penetration within China.
And Mark, of course, Ed shouts out that the suppliers are under pressure, market valuations being lost with Qualcomm, Skyworks. We're thinking Micron Technology as well. What about the supply side? What about the amount of manufacturing that's done in China by Apple?
Yeah, I mean, if you think about the larger Apple ecosystem and supply chain, right? When Apple is impacted by something like this, it's not only landing at Apple's doorstep, it's all the suppliers that contribute to the company's products, right? Qualcomm, you mentioned. There's other technology makers, Micron and such that you mentioned, that could be fearful of further bans impacting them down the road for products that their components are in. Certainly, this is concerning, but we have to see exactly how widespread this becomes. If you look on social media, China Mobile, there was a rumor yesterday going around that China Mobile would not be procuring iPhone 15 units as part of this ban, given China Mobile is a state-run carrier. It's a major carrier with nearly 1 billion customers there. So that was quite scary, but the carrier has come out through state media and denied the idea that they're not going to be working with Apple. So that is a positive there. But we really have to see how widespread this becomes and how this is going to impact the minds of consumers. Obviously, this ban comes at the same time that Huawei and other Chinese phone makers are upping their game in China too. So clearly, just days ahead of Apple's big iPhone 15 launch, there is some concern going on in China, but we still need to see how broad this goes.
Well said regarding Huawei. We'll dig into that in a moment. But for now, we really thank Mark Gurman, of course, our chief really correspondent on all things Apple. And let's get the investor take. Let's get a conversation with Alec Young now, chief investment strategist at a quantitative research firm, Map Signals. And Alec, did you agree with Mark there that really this is the concern of not just state-run businesses, but the fact that this is Chinese nationalism? This is a consumer no longer wanting to purchase Apple products.
Well, thank you for having me. Certainly a very noisy situation around Apple right now. There's no question that part of the negative inferences that are swirling around right now is this idea that Apple gets caught up in a nationalist rivalry between the U.S. And China. If iPhones, for example, were to become stigmatized throughout Chinese society over the next few months to the point that it depressed demand, those types of narratives inevitably are popping into investors' minds right now. But I think it's worth noting that so far, the ban in the government agencies, we're looking at about 500,000 units, according to a lot of the Wall Street research that I'm reading. And that's out of a total run rate over the next 12 months of about 45 million iPhones in China. So the current ban impacts a little over 1% of the units. Obviously, if it spreads to state-owned enterprises and it winds up having a bigger societal impact in China on iPhone usage, it would be much worse, much bigger. But at this point, it's fairly contained. It's also worth noting that Apple has been gaining market share in China over the last few years, about 300 basis points in the last 12 months. Now, it is true that Huawei is launching more competitive phones. So, it'll be interesting to see how that dynamic evolves. But the current context is that Apple's doing very well in China.
Its valuation is done very well as well. Do you think that basically this is a bit of a perfect storm, therefore? We're seeing this sort of market cap erosion because of how well tech companies have outperformed, because we're at a 29 times future earnings.
Yeah, I think the street's at about 650 for next year. So we're actually at 27 and change on the forward multiple right now. But there's no question that when the stock peaked at 198 a few weeks ago, it was around 30 times. It was priced to perfection. So this type of news is not going to be greeted favorably. In addition, we've got macro issues with rising rates that can also pressure equity valuation. So I think this is a healthy pullback. But in terms of the bigger question, does this change the bull case for Apple over the long term? I definitely think the jury's still out. There's probably some legitimate signal in today's news, but there's also a tremendous amount of noise.
Yes.
And overreacting to knee-jerk, noisy, media-driven things around this stock and many others, frankly, hasn't historically been a great way to make money on Wall Street.
And what's interesting is that Apple has a big event coming up pretty soon, but Apple has also been pretty dedicated to China in terms of what they've said, at least.
This is the big question for me, Alec, right? Last quarter, they said that there was a swing in China to 8% revenue growth in Greater China from a 3% decline the prior quarter. But it's what they called switchers. Consumers in China that were buying an iPhone for the first time or switching from a domestic or other international brand. I acknowledge what you just said, but look at the market reaction and explain to us whether this is knee-jerk or it's the market recalibrating what they heard from Apple in that earnings call.
I think it's a little bit of both. Obviously, it's knee-jerk because investors have to react to the news as it breaks. We can't control when we get the news, but definitely a recalibration of potential, revenue headwinds, earnings headwinds is definitely in the calculus here. But, ultimately, American investors, we're not used to gauging, government intervention of this magnitude. It's normally about the free market deciding who's got the best product. I think on that basis, it's clear Chinese people love iPhones. But obviously, when we have, the government's hand at play so heavily, it's difficult for Americans to read because, frankly, it's not something that we're used to in our home market or really in most major markets around the world. So we'll have to see how it plays out. But unless, the government takes a very heavy hand, I don't think this is going to really be looked back upon as a major negative game-changing inflection point for the company.
You know, Alec, the question of the day here on Bloomberg Television has been, is tech in trouble? You know, in the year of AI, the year of the Fed and valuations, is geopolitics in China now kind of an equal weighted risk factor?
Yeah, I mean, it's definitely, I don't know about equal weighted. We've got a lot of other macro issues we're contending with, but certainly geopolitical risk with China is at the top of the geopolitical risk table. And certainly, the situation with Taiwan and now just this general competitive tension that we seem to have going on with the Chinese. The trade secretary's recent visit, Gina Raimondo, didn't really go over that well. So it's definitely something that investors are going to have to monitor, especially in light of the recent regulations around semiconductors and, us banning their access to certain high-end semis. They're trying to do the same to us in other areas. We've got NVIDIA involved. So it's definitely something that investors are going to have to watch.
Alec Young, Chief Investment Strategist at Map Signals. Thank you. A perfect segue, because the other top story is SK Hynix has opened an investigation into the use of its chips in the latest phone from Huawei after a teardown commissioned by Bloomberg of the latest device revealed that SK Hynix's memory and flash storage was inside. Though the Korean maker confirmed to Bloomberg it has not worked with Huawei and it has been adhering, Caroline, to US sanctions. This is an incredible story.
And this is where politics and, of course, supply chain really intertwine. And timing, we were just mentioning Gina Raimondo, of course, was over there in China, Commerce Secretary. At that exact moment, Huawei very quietly unleashes this new product, the Mate 60. We all wonder where the chip has come from. Is it SMIC, SMIC as it's known, or have they been bypassing some of these very stringent, what do they call it, sort of high walls, the ability that the US seemingly been trying to cut them off from the supply chain that they still manage to access?
This is how it came about. Huawei put out the Mate 60 Pro. Bloomberg News got their hands on one. We took it to Tech Insights. They did a teardown. One of the main processors was made in China by SMIC. And now they've uncovered two memory chips, NAND and a high-end or next-gen DRAM, that are covered by sanctions. And SK Hynix has responded straight away, saying, look, we didn't know about this. We did not work with Huawei.
And meanwhile, it's been this sort of moment to celebrate, for the Chinese at least, this idea that they're able to produce these incredibly powerful chips in their own country, supply them, and therefore make an incredibly powerful new phone that some analysts were saying, could this be the Apple killer in China? And the question is how much they have managed to really build and operate and become self-sustaining when it comes to their own semiconductors in China. We continue to dig into that key geopolitical story. We continue to think about the knock-on effects for the entire broader market, Ed, because this is a key concern. China, US, what it means for Apple. And of course, when you've got the big bellwether that is Apple under pressure, you're going to have the whole NASDAQ on the downside. But just think Meta was sinking. It was actually in the green earlier in trade. It's now off by more than 2%. We're seeing some other key players, and we've mentioned the suppliers to Apple being under pressure, the Qualcomm, for example. 2-year yield, though, interesting that we're seeing the bond market just get a little bit of bid on the front end. Now, we've seen, of course, many wondering about where we see the Federal Reserve go, the jobless claims today, once again, strength in the US jobs market. But for now, maybe we get a little bit of buying moment after the sell-off that we've seen in the bond market of late. Euro under pressure because we've got very weak European data overall, really eking out the tiniest bit of growth in the second quarter. What does that mean for the ECB? The euro is down versus the US dollar. So much more to come on the macro and the micro. This is Bloomberg Technology.
Time for Talking Tech. First up, California Governor Gavin Newsom signed an executive order on AI regulation that instructs state agencies to examine how artificial intelligence might threaten the security and privacy of California residents, while also authorizing state employees to experiment with AI tools and try integrating them into the state's operations. Newsom told Bloomberg News there's a Pandora's box being opened here, and we just want it done in a safe way. Plus, billionaire Patrick Drahi's debt-laden telecommunications empire Altice is weighing the sale of its French data centers in a deal valued at $1.1 billion, as well as the sale of part of the capital of Altice France and options for Portugal Telecom and its ad tech company pleads. All of this in an effort to shore up confidence in his network of businesses, which have been battered by a Portuguese corruption probe targeting key figures linked to Altice. And finally, a fintech owner in London is facing allegations that he helped notorious drug traffickers attempt to launder hundreds of millions of euros through a crypto exchange platform. The 38-year-old Italian is alleged to have converted piles of cash into crypto accounts for a criminal gang. The case puts the British financial technology scene under fresh scrutiny amid fears that its weak controls are enabling the movement of illicit funds around the world. Caroline.
Really global set of stories there, Ed. And look, now we're going to return a bit more to home and, well, the IPO market. We are gearing up. Online grocery delivery startup and indeed, or more broadly, e-commerce tools, Instacart is preparing to set a price range for its IPO and start its investor roadshow as early as the coming Monday. Boy, have we got this back-to-school feeling right now, and I'm pleased to welcome to the show Bloomberg's Ryan Gould, who really can set the scene of what story they're going to be trying to tell investors on this roadshow come Monday.
Yeah, thanks, Caroline. I think, there's certainly some energy as we head into this back-to-school period. Dare I say, probably a little bit of cautious optimism. There's a set of new IPOs that sort of have been talked about for, months, if not years. In Instacart's case, as we said, Instacart is about to set its price range as early as Monday, kick off a roadshow, and then they could look to price it as soon as the 19th, so almost a week later, trading on the 20th. I think, this is a point that, we're starting to see people sort of jostling for position. Arm is already out there. It's the biggest IPO of the year. They've got their price range, could be pricing soon. But, there's certainly some energy, I would say. And I think probably there are quite a few investors who are starting to feel a little more constructive about how we think about IPOs in the US.
Ryan Gould, great to have him on. Very early to the game in terms of Bloomberg. I think we've just welcomed him to the company and already right here on Bloomberg Technology, Ed.
Caroline, coming up here on the show, the clock is ticking before billions of dollars in government aid for daycare centers runs out. We'll talk to Alana Berkowitz, a founding partner of Springbank Collective, about how the strains could be created for women in the US workforce. Also, bizarre one, we're looking at shares of Meta, parent company, of course, of Facebook and other properties, kind of down now 0.8 to 1% in the session. You saw it much earlier in the day. It had been higher, markedly higher, now down 0.8%, have dropped sharply and quickly to 2%. We're going to look into the reasons why. This is Bloomberg Technology.
Now for work shifting. It's where, we look at the changing landscape of the labour market amid advances in technology. And today, that jobs data, initial jobless claims in particular, showing resilience in this workforce. Lowest level since February for jobless claims amid a resilient labour market for the US. But there are issues. Historic labour force gains that we've actually seen in particular for women, could be eroded, could be stalled, as a pandemic-era lifeline to daycare providers expires, with more than 70,000 childcare programs estimated to be in danger of closing. Joining us now to discuss, whether technology can offset this setback. Alana Berkowitz is the general partner at Springbank, which invests in early-stage companies building, infrastructure to enable working women and families to succeed. And ultimately, can technology be any sort of solution in this scenario? It seems like a terrible scenario at that.
Yeah, so it's not a great scenario. It's pretty bad timing. We're here at the start of the school year. Against most expectations, the percentage of moms of young children in the workforce is actually higher than ever, having recovered post-pandemic, which has huge consequences for women's lifetime earnings and career trajectories. But as you just mentioned, we're about to lose $24 billion in stimulus money, which might put 300 children's childcare slots at risk, and of course, put at risk the ability for all of these women to continue to participate in the workforce. And to be really clear, of course, this isn't just a mom issue, it's an economy issue.
It's an economy issue, and you say, rightly so, it's an impact on GDP, on earnings. What about, though, any ways that in companies you invest in can be some sort of support amid perhaps slowing money funds coming towards these childcare?
Yeah, of course, innovation can't replace infrastructure and public policy. It can augment. So technology and startup solutions can't print money, but there's a lot that we can do to make it easier for families to find, access, vet, and pay for childcare, and of course for care businesses themselves, which are often pretty small mom and pop operations, to run more efficiently and effectively. So maybe I'll give one example from our portfolio, and also happy to talk more broadly about areas where we think technology can make a really big impact. But we're investors in a wonderful company called Wealthy, which combines digital tools, AI, and world-class human expertise to basically serve as a care coordinator for the employees of some of the U.S.'s largest employers like Best Buy, Cisco, Hilton. And basically, they match families with care professionals, automate workflows to get tasks done faster, whether looking for a home health care aide for your aging mother or backup childcare for your kids so you don't have to miss work. So that's just one example in our own portfolio. But, we think beyond backup care and childcare specifically, there's a lot of opportunities for technology to improve the overall care economy.
Yeah.
Ranging from, first, it can make, hopefully, care jobs better.
Yeah, dare I say artificial intelligence in that sentence?
Listen, if we don't talk about AI, are we even doing a technology show right now? So yes, surely, we know that, for instance, healthcare worker burnout is an enormous problem in the industry. Across the care economy, there's 1.8 million vacancies right now. And for instance, things like automation or AI-supported charting and documentation could cut that work dramatically, giving people time back in their schedules, hopefully improving some of the burnout crisis. So that's just sort of one area. I think there's also a lot of room to use innovation and technology to actually even make care more affordable. One of the things we hear from providers is that even with government subsidies in place, it can take weeks or months for those child care payments from the government to be sent to providers. And these are often low margin businesses that are kind of operating month to month because of the operational complexity in collecting that data. And there's a lot of room for sort of modernized financial rails and technology to improve that flow.
Alana, the fear is that the tap of stimulus money just closes abruptly, right, later in the year. But the problem of the last 12 months has been actually getting money to people. And I wondered how closely you're tracking sort of the fintech solution that brings government infrastructure into the 21st century.
Yeah. So, I think there's a lot we can do to improve the rails on how money flows between caregivers and receivers, also insurance companies, employers, and the government. We've actually been seeing a decent amount of startup activity in this space, even outside of care, whether it's trying to make it easier to access government benefits like food stamps through companies like Propel, companies like Promise Pay that make it easier for folks to make payments to the government and interact with government services. Yes. And I think there's a lot of room. Look, we're all used to being able to do basically anything from our phone, right? To do our job, find a hotel, do everything else. And I think that there's a real push to sort of modernizing the government experiences into our daily lives.
Alana Berkowitz, the Springbank Collective, we thank you for joining us on what is a pretty dramatic childcare cliff. This is Bloomberg.
Welcome back to Bloomberg Technology. Ed Ludlow here in San Francisco.
And I'm Caroline Hyde in New York. And Ed, let's get to what is a geopolitical picture, a macro picture that just questions time and time again, can the NASDAQ, can technology stocks outperform, manage to continue to gain when we're seeing rates on the higher side, when you're seeing geopolitical tensions build between the US and China, and ultimately when we start to question valuations. Today is another day of losses on the NASDAQ, big tech really feeling the brunt of some sentiment souring, and also economic data slowing in Europe, also slowing in China. I shine a light on what's happening to the yuan that trades offshore. It's actually at a 16-year low. The US dollar has been outperforming because this economy seems to still be managing to weather the storms that are being felt elsewhere. I'm looking at what's happening in a 2-year yield, actually getting a bid after we've sold off. It's back below 5%, but nevertheless, this focus on the Federal Reserve and what it does to curtail inflation and a very resilient jobs market, which we got in the jobless claims data a little bit earlier today, yet more evidence of that. Go into some of the individual names because we know the story of the day is basically a tech one. is that of Apple. It is, of course, the concern that China will be pushing back on allowing its own employees, government employees, from buying Apple iPhones. And what does that mean in terms of a consumer pushback? Apple under pressure off by more than 3%. We've seen, of course, $200 billion in terms of market value falling over the last couple of days. We're seeing Qualcomm suppliers really feeling the pain. Actually, if you go to SPLC, it's the supply chain that you can see on the Bloomberg. Qualcomm apparently getting 22% of its revenue from Apple, a key supplier. And we're looking at T-Mobile, though. I wanted to give a little bit of ray of green today. T-Mobile actually giving money back. We learned that yesterday. Dividends. They're going to be buying back shares. And, of course, that's always music to an investor base's ear. Also, some BI reports saying that, look, the Apple iPhone 15, that's going to help the likes of T-Mobile. Ed.
Yeah, I'm not doing much to put green on the screen today. Let's get back to that top story in the world of technology. China planning to expand a ban on the use of iPhones for government-backed agencies and state companies. That, according to Bloomberg sources. This all happening in Apple's biggest individual foreign market and global production base. Apple, as well as the relevant Chinese agencies, did not respond to requests for comment on the Bloomberg story. Joining us now, Bloomberg's Katie Lyons out of D.C. And quickly, this is becoming a tit for tat. 24 hours ago, the Journal report on some government agencies, Bloomberg reporting more. It follows the Gina Raimondo trip to China.
It does. The Commerce Secretary made a trip to Beijing, of course, just last week, Ed. She, following Secretary Janet Yellen, the Secretary of State Antony Blinken, the climate envoy John Kerry as well, all an effort to shore up the relationship between the largest economy in the world and the second largest economy in the world. And Raimondo specifically trying to ease the path of U.S. businesses doing China. She talked a lot while in China about the uncertainty of operating in that market, given headlines like what we are seeing take place with Apple, the idea that a ban on iPhone would expand from sensitive departments to, as you say, Ed, government-backed agencies, state-owned enterprises. It's not clear, based on our reporting, how many companies or agencies could eventually adopt these restrictions. But obviously a massive risk to a company like Apple, who is so dependent on China, from a supply chain perspective. A lot of iPhones in the first place are made in China, in factories there, employing Chinese people. But also from a revenue perspective, this is a market that made up about a fifth of their revenue in the latest quarter.
You put that context so perfectly, Kaylee, but also the context is that this is a building concern not only from competition. We think of Huawei and its latest phone reveal, what that does for Chinese sales for Apple, but also what that means for the relationship when we're thinking of Huawei and its access to chips that the US is trying to prevent them getting. Can you just give us any update to what Jake Sullivan and the like have been commenting on that?
Yeah, this is a very prevalent topic of conversation here in Washington right now, because, of course, it was just last week that Huawei announced its smartphone that it had really said was a triumph against U.S. sanctions because it was made using Chinese-made chips from SMIC. So in theory, what China is saying is that they were able to get around sanctions, do this in spite of sanctions. What we're hearing from authorities here in the U.S. on Capitol Hill, for example, though, is that this may have actually been done in violation of sanctions. Congressman Michael McCaul, who, of course, is a Republican, he chairs the House Foreign Affairs Committee, was speaking overnight saying that SMIC may require an investigation because he thinks it's obvious the company violated sanctions by supplying components to Huawei. And, of course, this is a company that's on the entity list here in the U.S. for national security concerns. And that's been echoed by others as well. Mike Gallagher, who chairs the China Select Committee in the House, also was saying that the U.S. may need to look at a ban or an ending of all exports to both Huawei and SMIC. It is this idea of national security risk on the part of the U.S. being paramount and more restrictions potentially being looked at as a result of that. So as Ed was saying at the very beginning, it is this kind of tit-for-tat idea. The U.S. moves to restrict one thing, China moves to restrict another, and it seems like this is just the pattern that we are in at this point.
Caro and Kaylee, to a point that Kaylee made a minute ago, Citigroup's put a note out since we've gone on air, basically saying what Kaylee did, that we don't know how many companies or government agencies or people in them using iPhones, but it's probably the case that they were already transitioning away from iPhone anyway, so it might have limited impact. I guess that note, Kaylee, speaks to the point that relations between the US and China, in spite of , Raimondo's visit, are still not good, right? We're not in a good place right now.
No, absolutely not. And this is the tricky dance. On the one hand, you are trying geopolitically to make sure that the relationship is more stable, or at least the two sides are talking. On the other hand, to protect national security interests or economic interests or otherwise, you also are seeing very targeted action that works, in theory, against China's interests. Things like the executive order on outbound investment into certain areas of technology like quantum computing, artificial intelligence, semiconductors. It makes it very difficult for countries to interact with China, to engage with China, but also clearly for companies themselves to figure out how exactly to navigate this market. And to the point of the Citigroup note you were just talking about there, Ed, this is the idea that it may not just be necessarily about iPhone sales, but more broadly about the environment and the uncertainty around it.
And no wonder, therefore, Nvidia's down. You're seeing the likes of Tesla down, other companies with big exposure to China. And I just think of the ARM IPO that's coming as well. Caroline's brilliant to break it down from a Washington perspective. We thank you. Let's just shift gears, but it's probably also one that Washington has its eye on, because crypto is where we're going next. But it's an update on the FTX case. Former executive Ryan Salem is planning to plead guilty to criminal charges over the collapse of FTX, according to sources. Now, Salem was a co-chief executive of FTX's Bahamas subsidiary before the exchange basically imploded last November. Let's bring in someone who's been all across it, Bloomberg's Sonali Basak, for more. And perhaps, given the other key executives gone before, this isn't too much of a surprise?
One thing that is potentially different here is whether or not he will cooperate. That has not been ascertained yet, according to this scoop by our own Ava Benny Morrison, who has really been reporting on Ryan Salem's role in this for many months now. Remember, when the initial issue had come to the fore in the Bahamas, it was Ryan Salem himself who had really brought the case to Bahamian officials, very specifically that customer funds may have been commingled. And so to come back around in this fashion is quite interesting, because even though he may plead guilty to certain charges, criminal charges, it's not clear what his level of cooperation will be.
Well, the timing is interesting in particular because Sam Bankman-Fried himself, I think, is scheduled to stand trial 1 month from now. Does that contribute to that court case?
It certainly could. And remember, the other folks at Alameda and FTX who have already come forward, they are cooperating. And so we know that whether or not he does testify, it definitely adds another element to this trial. Remember, I just kind of want to talk about their relationship for a moment here, because I had a lot of my own reporting around it. I had interviewed actually both men right before the collapse of FTX. I spoke to Ryan Salem just a week or so before. The interesting thing about both Ryan and Sam Bankman-Fried here is they were not always in the same place. Ryan was back and forth between the D.C. suburbs and Bahamas. When I spoke to the people around them, I was always told that they kind of kept separately. You had Ryan Salem really donating to the tune of $24 million to Republican candidates, when Sam Bankman-Fried was donating to tens of millions to Democratic candidates. They seem to have some pivotal differences. So Ryan Salem's role in all of this is certainly interesting leading up to this trial, though still very early to tell exactly what that would be.
Interesting, those political donations. You remind us, prosecutors withdrew the campaign finance law issues being alleged at these particular men, right?
Part of this issue here also was how the money was used, to the point you're making. And the campaign finance violations was a definite worry here until those violations were withdrawn. But remember that they still are a big question mark about the role of cryptocurrencies in Washington and why these senators had taken the money in the first place. What was the ultimate motive? Well, I'm going back to our initial reporting, because remember, it was not a little bit of money. Both of these men were donating almost more than anybody else in the most recent cycle. And I'm just going back and looking to remember here, Ryan Salem, there were some pro-crypto, very clearly pro-crypto candidates that he was giving to, make no bones about it. Remember, when Sam was giving, he mostly said that this was a matter of pandemic preparedness and altruism, effective altruism, but not a matter, as Ryan had said more explicitly, about crypto. Ryan had also had donated to, very plainly here, a lot of candidates with ties to Donald Trump. They had different rationales for why they gave. And so it's kind of hard to tell at this point what the motive was.
Bloomberg's Sonali Basak, such deep reporting on what has been an endless saga, when you'll be back for more. Thank you very much. Okay, up next, coming up on Bloomberg Technology, Keep on trucking. The founders of the former self-driving unit of Ford and Volkswagen are back, and they're launching a new autonomous trucking startup. The co-founder and CEO Brian Selesky joins us next in an exclusive interview. This is Bloomberg Technology. The founders of Argo AI, the autonomous vehicle company that was shut down last year, are back, and they're at it again with a new self-driving business, this time focused on autonomous trucking rather than consumer cars. It's called Stack AV, and it's backed by none other than SoftBank. One Pittsburgh official told Bloomberg he expects SoftBank's commitment to Stack to be more than $1 billion. Let's bring in Stack AV co-founder and CEO Brian Selesky for more on his new venture in an exclusive conversation. Brian, just start by explaining what you're doing with Stack AV, what the technology is and what the end goal is.
Hey, Ed, it's great to be here. Well, as you said, we're announcing the formation of our new self-driving startup called Stack. We're building fully autonomous Class 8 trucks. And we're looking to solve really some of the biggest issues that the trucking industry faces, whether it be driver shortages, retention issues, over-the-road safety, and just the inefficiencies that we saw in the supply chain during the pandemic. We really think self-driving trucks has a huge opportunity here to solve some of those issues.
Brian, you're coming out of stealth, and whether it's with more than $1 billion or not, you've kind of moved very quickly to grow. Where will you need to spend? Like, talk to me about the talent costs, the compute costs in your project.
Well, our priority is to build a great company that can really scale and move fast and realize those benefits. There's the number of people and that's required to build this technology is enormous. The capital needs are obviously large, but our priority is to build that fantastic team and to really get the technology deployed as quickly as we can and get test vehicles up and running. We are a new company, but we have been moving quickly and just excited about the team that we built.
Yeah, Brian, you've always looked more holistically at autonomous technology. This is a very specific technology and use case. It's very similar to what Aurora is doing. And so I just wondered why you sensed this was the best way of commercializing.
Well, we think that the business model is really interesting. The cost of goods to ship goods has really increased substantially. We know a lot of small businesses are feeling the pain. Times to deliver are increasing across the industry, especially in larger markets. So we just think that autonomous trucking has the ability to address a lot of those inefficiencies. And it isn't just in the autonomous part of it, the self-driving aspect of it. It's also in the scheduling and the overall logistics, the way the system works. There's just a lot of opportunity for improvement, and we think not just taking the benefits of AI, but also the benefits of generative AI and a lot of the latest advancements that we've seen over the last year, we think can really be applied to the entire logistics equation.
So, Brian, does that speed up things? Because ultimately, the Ford VW backing became impatient. I think it was quoted that one Ford executive said it was easier to put a man on the moon than it was to get autonomous driving really up and running. Did you just need a different mindset of length of time to commit capital here?
Well, I think this requires patient, long-term capital. It requires, and it certainly requires a big vision in order to make this happen. But at the end of the day, we want to improve people's lives. We want to improve the overall cost structure in that entire supply chain, and the only way we're going to do that is by making big changes to how it works, right? And that means anytime you're working on sort of a world scale problem, that means that you have to really work in the details, and you have to take a big vision and try to make it a reality. That takes capital, it takes time, and I think what you're seeing in the field in general is that different companies are sort of playing to their strengths and how they feel they can be most successful and adapt their business. What's unique and exciting about this is that SoftBank has a large commitment to AI in general. They believe in the power that AI has in transforming our everyday lives and making it better. And that's where Stack AV comes out of, is doing that applying it to trucking.
Yes. Brian, SoftBank said they're not just backing you with capital, but also with AI competence as well. Could you just explain that? Is that your point of differentiation here, your access to software and talent?
Well, we have access to the entire SoftBank group, the entire team. They've been wonderful in giving us such a huge lift in getting the company started. They see a lot in terms of business models and what works and what doesn't. We've seen a lot, our team, in terms of what works and doesn't, and to be able to see around the corners with the how to build the technology. And so at the end of the day, putting those two brains, if you will, together, we think we have a really differentiated story and a very compelling team that can win here.
And Pittsburgh's where it's happening. Stack AV co-founder and CEO Brian Selesky, brilliant to have you. We thank you. Meanwhile, coming up, look, we're just finishing the conversation on artificial intelligence. We're going to keep on going with it. An AI startup, Imbue, raising $200 million in a Series B. We're going to speak with the CEO of the unicorn next. This is Bloomberg Technology.
AI startup Imbue, the company formerly known as Generally Intelligent, has just raised $200 million, Series B, at a valuation of over $1 billion. Joining us now on set is Kanjin Q, CEO of Imbue. You also secured 10,000 H100s, and that's become like the badge of honor for people building a foundation model. So what was more important, the cash or the compute?
Both, honestly. So cash is much easier to come by than compute. And we managed to get our compute quite early because we saw this coming. And so we're very excited to have both.
Was that the structure of the deal? I have to ask, NVIDIA's one of your backers, and NVIDIA's backed many. Did they just participate in the round, or was there payment in chips, if you see what I mean?
No, it's all cash.
All cash. And as a quick follow-on, what are you building? I mean, we know a few companies building 100 billion parameter foundation models.
That's right. So we're really focused on AI agents, which are systems that can take action in the world and help us as people accomplish much larger goals. So today's AI systems, they generate an output, but they're not going to go off and do a bunch of research if you're writing an essay and come back and restructure the argument and think through and reason through what's happening. And so we build systems optimized for reasoning so that we can end up with AI that can actually help us do, what we say, what we want, and not just what we say.
What's amazing, Kanjin, is 200 million for a bold focus on AI agents that people actually haven't been able to play with or see or touch. Maybe one of your key backers has. But I'm interested as to how far down the road you are in terms of development from your perspective.
Yeah, it's a great question. I think it's always hard to tell. We are quite excited over the next couple of years to hopefully have things that people can use. It might be sooner, it might be later. I think, just like how for Apple, iPhone was under development for 10 years before it came out. It's not going to be 10 years, but there is a right time for technology to be taken to market, and there is a such thing as bringing it to market too early. So we really believe in serious use, seriously using these systems ourselves internally every single day, and having some beta users that are using them every day. And that's what teaches us, okay, this is good enough, this is not good enough. We need to improve the reasoning models in these ways.
It's really interesting. The previous founder of Stack was just talking about the need for patient capital. And looking at your cap table, it kind of looks similar. I mean, it's not a normal cap table in terms of VC money because, in fact, it's the Astera Institute and actually kind of a not-for-profit. You've got NVIDIA, you've got Cruise. Are they behind you in the idea that this is going to take some time?
They are, and that's actually what we were looking for in this round. I think something that's important to remember is that OpenAI didn't ship ChatGPT until 5-6 years after they were founded. And it's whenever we're building a really deep technological breakthrough like this, that runtime is necessary.
Kanjin, can you tell me a little bit about your business and company? Are you highly concentrated in San Francisco? Are all of your talented engineers here? And if so, why San Francisco?
Yeah, it's a great question. We are primarily based in San Francisco, in person, in the office every day. And we do have some remote team members, remote engineers. We structure it as a kind of hub and spoke model where the collaborative hub is optimized for collaboration in San Francisco, and remote team members are optimized for autonomy because that's often what we want remotely. San Francisco is just a great technology hub. You know, we host lots of events, this Thursday Nights in AI series, and meet a lot of people here, have a lot of potential customers here, so it's a good place to be.
A decade in the making. You were building the archive, then that group house of like-minded thinkers and builders, and still focused on the SF beat, really, overall. We thank you, Imbue CEO Kanjin Q, joining us. What amazing show, but that does it for this edition of Bloomberg Technology, Ed.
Yeah, don't forget you can recap on our podcast wherever you get yours, Apple, Spotify, iHeart, and on Bloomberg. From here in SF and New York, this is Bloomberg Technology.